The valuation under the Customs Act 1982. For the sake of the for the sake of the brevity of goods and service tax compensation just has been referred under the GST compensation cess. It may be noted while the computation of customs duty payable on all the illustration constraints agriculture infrastructure developments has been ignored. After studying this chapter, we will be able to comprehend the concept of value of relation to import and export, appreciate the concept of indirect tax and valuation of same, identify the two approaches for computing assessable value, assess the value of customs valuation, determine the value of imported goods, rules of those seven customs valuation determines and other rules on, identify the data determines the data of duty and tariff rate, analyze the apply the special provision reclassifying of the set of article article and accessories. Synthesize the above provisions to determine the accessible value of import and export of goods and total customs duty in the integrated payable importation. Chapter of overview. Terms used in the common parlance. Technical terms related to the value of the cost of import and export. Valuation of goods based on section 14. Customs values determined by the value of imported goods rule 17 and customs values determined by the export rule 7. Date of determination of a rate of duty and tariff valuation. The special provision of the classification of the seat articles introduced. The manner in which duties of customs are charged on goods imported into the India, import duty only on the goods exported from India, export duty was basically either by way of specific duty based on the quantity of goods like 1,000 per metric ton of steel, or VAT varam duties, expression of percentage of the value, 40% VAT varam, etc. Disadvantage is specific duty in which revenue to the government remains fixed unless there is a variation in the quantity of total imports and exports. The continuous upward trends of the price of goods has suggested that the government is losing increase in its revenue by following the advanced duties. In terms of the commercial parallels, it will be useful to know and understand the terms of the concepts of document used in the international trade transaction. Invoice. This is a basic commercial document showing the particulars regarding description of the goods, quantity and unit of price, discount and net price, name of the consignor, consignee, and payment particulars, contract and acceptance of order on the basis of which goods are supplied. Packing specification covering particulars of packing specification, giving particulars of the contents of each package's consignment. Certificate of origin. The certificate issued by the competent authority in the country of manufacture gives the extent of the manufacture value addition to this country. Bill of lading. The negotiable documents given by the carrier of the cargo gives a particular of port of shipment, number of package covered by the consignment, mark and numbers of the page, and name of the vessels which the goods has been dispatched, name of the consignee of the goods, whether the freight has been prepaid or collected distribution. It is negotiable documents which has been rendered to the carried for getting a delivery of the goods. Air consignment note. It is a document concerning the bill of landing in the case of a cargo imported or exported by a country. It is a document showing the particulars of the consignee of which buyer is placed an order of the shipment and is normally gives the particulars of full description of the goods, unit, price, mode of payment, quantity required, delivery instruction. Quotation. This is a document which indicates a price, the terms of other condition on which seller is willing to supply the goods to the buyer. Acceptance in refers to the formalization of the contract sale between the buyer and seller. Once the seller of the goods sends his acceptance of the order of the buyer, the contract is complete. This acceptance inter alia contains a particular description of goods to the supplier, unit price, including discount and other charges, time and return, terms of delivery, penal clause, a breach of contract, agreed terms of payment. A letter of credit. This is an instrument delivered by the bank, intimation of seller that the buyer has instructed the bank, and the bank will, accordance to the instruction, pay the seller of the goods. The bill amount has a supply of goods and percentage of certain documents evidentially shipping of the goods. Side draft. Documentary bill of exchange between importer and exporter. The promising payment to exporter immediately on the delivery of the original negotiated document to the importer through the banking channel. It is a contract of time draft where the importer gets fixed time for making payments after delivery of original negotiated documents to the importer. Delivery note. The authorization given by the local agent of the carrier on surrender of the original negotiation copy on the bill of lading or a air consignment or the direction of custody of the cargo delivery of consignment or imported units. Mate receipt. The receipt given by the first mate, the first officer or the cargo supervisor of the conviction of the verifying the total quality of consignment received by the board of vehicles. Bill of landing, air consignment note and issued by the agent of carrier company or surrender of the mate. Retirement documents. Retirement documents. The process of handling over the original or negotiable copies of the shipment documents into invoice, packing specification, certificate of origin by the exporter or importer generally through the bankers. Non-negotiable documents. Since the retirement of the original documents take time, and when non-negotiable documents are given to the imported facility clearance, negotiable documents require the original bill of landing, airway bill shows the taking delivery cargo. However, non-negotiable bills of landing, airway bill does not require original to be shown by the buyer. The delivery can be given upon authentication of the consigning coordinator boat and light rage carriage. Sometimes the vessel is unable to get the berth along with the convoy of the convoy on the harbor. The goods are then transported to ship in the shore of the boat site. These charges are paid through called boat or light rate charges. Custom broker. Since the importer exporter may not be able to devote time and energy to clear the imported goods and exported goods, six involve running about several organizations, part of the customs like port, trust, a streamer agents, insurance company, then assistance with this agency, gains having adequate technology knowledge and expertise in providing form of customs order. Insurance cover. The customer is to insure all the goods which is traded in the course of international trade. A general cover related to the risk of accounts loose, preferage, fire, storm, etc. However, the loss of goods and the account of seizure goods were due to war and separate cover. This is a customary to refer the insurance of the marine case risk insurance and war risk insurance, a policy and cover of such insurance related documents for valuation. The technical term relating to the value of the course of import or export are international commercial terms. X factor of price, FA is free alongside, FOB free on board, CAF cost insurance freight. X factor of price. It is the price of the goods at the factory gate. It includes cost of production, manufacturing margin of profit without cost of freight or output delivery charges. FES free alongside it is a cost of which export goods are delivered by the seller to the export of shipment. They include X factor of price plus local freight plus local taxes. FOB free on board. Free on board means stage at which goods are placed on the board vessels and the port of shipment. It can be said to be include FAS, loading charges and exporters. CF cost insurance freight. It is a cost of the boat's delivery at the Indian port. FOB plus insurance freight. It is covers cost of goods. Sometimes there is a refer to CFSC also. The concept of this indirect taxation valuation of same. The custom duty is an indirect tax which is tax on the goods and it is not a tax on person having or owning the goods. The charge of tax attracts the goods unless the tax liability is discharged. The goods are not allowed to be proceed further. It becomes therefore necessary for the importer who desire to take the clearance of the goods from home consumption. It is discharged duty liability. Similarly, in the case of baggage of the passenger traveling from port, the passenger cannot take goods unless a duty liability is discharged. Essential simple. It is then like an article. Similar situations should attack the same burden and collaborate following. There should be a uniform of tax burden. Since the rate of duty is already fixed to the goods, the value of the goods should be similar to all the importer and exporter for the goods for the same country in the similar quantity and commercial level same time. Value of goods should be approximate to the point of taxation. That is the case of import. The value of the point of import is relevant. The variation in the price are agreed in the transaction on the accounts of factors other than the course of normal intention. Normal international wholesale trade shall be adjusted. Variation price agreed in the each transaction occurs of factors other than the course of normal international wholesale trade shall be adjusted. Section 241 Customs Act 1962 defines the value of relation to any goods value of therein according to the provision of subsection 1 2 of 14. Two approaches of compute this as accessible value. The course of import, the goods are taken into following two: manufacturer to supplier, then supply first, then port of shipment to port of importer, the cost of importer to cost of wholesaler and cost of retail customer, manufacturer to supplier, port of following 1 2 3 4 5 6, so supplier port of shipment, so manufacturer to supplier, then port of shipment to port of importer, cost to importer, to cost to wholesale dealer and cost to retail customer. Theoretically, the value of goods in stage 1 2 3 and 5 cost of importer, cost of wholesaler, and cost of retail is tangled and ascertainable. Furthermore, the value of the document is capable of capable of verification of the comparison of corresponding values and sources as similar goods documents involve such changes. Manufacturer price list, quotations and sales invoices, supplier sales invoice markup price, customs approved attested document showing the value adopted by the levy of export duty and allied concept. Importer accounts book, sales invoiced by the exporter, the wholesale dealer of the next purchases, market trends in the price, sale invoice and wholesale dealer and trend price of markets. Invoice of values normally CIF, FOB values of the goods. General rule is that the value declared by the importer, that is a declaration value, shall be accepted by the customs officers subject to the fulfillment of the condition. Else the market values wholesale price as the importer or regulator selling imported goods. Two are these are the two tangible and readily available data at the hand of customs officer arriving and processing of that is notional deducted value of goods is a approach that must be used for customs officer if the declared value is not accepted by the value law. However, the default mode of valuation is always a declaration transaction value plus the elements that are to be added under the law reference section 14. Valuation of goods based on the section